Hey traders, Raghee here. Welcome to Charts and happy Monday, everybody. Hope everyone's doing well. We have an unusual market open today in that the participation that we're going to see today is going to be fairly limited. When you take a look at the economic calendar, you'll notice that we have a number of bank holidays. Pretty much the U.S. market is the only market that's open. That doesn't mean that we don't have hot zones today. In fact, if you have all, everyone should, well, anyone in the rooms, the options room, futures room, sector secrets mastery room, I alerted out the weekly notes. We had our Sunday show. And so you know what I'm looking for this week in the market. And so the idea, sort of to follow up on the free video that I sent on Friday, I think that when you look at that video and then you see what we're going to talk about here in Charts and Coffee, you're going to notice that we've broken certain thresholds. And while there are still uptrends that we can buy the dip, as now it appears the S&P is really going to get some more traction south of the 200 propulsion, we're going to see more opportunities to sell the rip. We're going to see more red momentum, bearish trend markets emerge, not only at the index level, but the sector level. And then that then does what? It filters down to the individual stock levels, index, sector, stock. All right, so that's pretty much the way we're kicking off the week. Sort of a, it might as well be a holiday day. It might as well, it's going to be absolutely a bank holiday affected session because we're not getting the participation from the other financial centers. Nonetheless, there are economic events that are happening in the US. And so just keep that in mind. All right, so let's go ahead and jump into what this show is, of course, all about. Your questions, kicking it off with, and I'm actually going to resize my window here. This has been working out pretty good. By the way, this is just a quick look right here at the notes that I send out to you all to give you a good idea of, where my focus is for the week. All right, so Julian, good morning. VALE, sure. So VALE hit the agro entry, yes. So we have some interest in a number of these names. We have a lot of interest in a number of the names that are still trending within the SLX, within the XME. I will tell you, Julian, I've got my eye on, and I don't believe we sent out an alert on VALE. So, when I talk about agro, moderate, conservative entries, I mean, we're probably at a zone, but I don't think we have a new entry on VALE, but I'll double check. We definitely want to look at this. We definitely want to look at NUE. We definitely want to look at CLF. I'm actually typing this in the wrong place. There we go. NUE, CLF. So we don't have any new entries here, but are we interested in this corner of the market? And you'll notice, absolutely, right? We're absolutely interested in this corner of the market considering the structure. So back to VALE. It's a neutral trend. So now we start to go into the relative performance corner of our conversation. And this is where we start looking at the multi-charts within the TOS platform. I've shared this with you all in the Sector Secrets Mastery Room. This is that 12 chart layout where you see that large chart in the upper left-hand corner and then the weighting of the next 11 names within that ETF or within that index. And I think if we go through that process, Julian, you're going to see that VALE is not an outperformer from that relative standpoint. So what do I think? I think that I like where you're, look, probably the most important thing is to be looking in the right place. Julian, You are absolutely looking in the right place. Now we want to get a little bit more granular and ask, is this the best example of what I could be buying? Or is it simply the one that's in the zone? Because there's always a funny little tricky part of being a trader where we don't realize it's less of a choice and more a lack of options, right? How many times have we made a decision not aware of the fact that it really wasn't a choice, it was just a lack of options? And in this case, do we have that many names that are in the zone where we can execute an idea? So be careful here because again, if we were to compare, that's what relative performance is. It's a triage of sorts, right? Triage comes from the French word trier, which simply means to sort. So if you're doing your sorting and then prioritizing in terms of that, in this case, the quality of the trend, how acutely do we want to be aware of that? You're going to find that certain names, while valid, will just simply fall down the list of symbols on your watch list, right? We always want to think about not just our watch list as an unprioritized group, but rather it's the Billboard top 40, right? It's what's number one. It's what's number two. We want there to be that sorting. And I just don't think VALE would be near the top, but you're looking in a great place. And those are the other names that are in that group that I'd be keeping an eye on. All right, next up. Hey there, Kevin. Happy Monday. Could I please review XLRE? So yes, if you all got the notes and you know that I shared with you all the sectors that are in up and down trends and the sector secrets mastery, we'll get a little bit more detailed into that group. But everyone has that large list that I sent out yesterday, again, in the rooms. So as far as XLRE goes, in many cases, Kevin, we're going to, again, look at the boat, look at the tide. Of course, XLRE is the tide. So we'll start there. Excellent. And then what I would also check, Kevin, is the liquidity on XLRE. So sometimes we go through all the chart work, we go through all the analysis, and we find levels that we like, and then we just kind of map that back to the option chain, and we look for the open interest, we look at the volume, mostly open interest, and we notice sometimes it's just crickets and tumbleweeds, just nothing going on there. So double check that, but as a general rule, double green. This is an aggro level in terms of the volume ledge. Good eye on the volume ledge. Right there, call it 49. And then really what I'd like to see is a pullback to the 21, possibly even a pullback to 48. So we're getting there. We're getting there. And then, Kevin, make sure you're looking at some of the names within XLRE that look like XLRE that could present us either something more budget friendly, because of course, while we are not focused on small account trading, what is it that I talk about? What is my sort of Ragheeism? Scalability, right? It's not about a large account mindset. It's not about a small account mindset. My thing is scalability. Can someone come in and buy 2 contracts of a certain symbol? Can someone come in and buy 22 contracts? Heck, sometimes we might have 42 contracts. We were just talking about the Lorna Bot and I were talking about the FXE trade that we have on right now, and that option was $1 and change. We have a lot of, and it's quite liquid. We have a lot of traders that have multiple contracts in that. Scalable, right? All of us, regardless of the account size that we have, are entering the trade. The difference isn't when we're getting in. Really, the difference is with how many contracts are we getting in. That's scalability. So I would also look for maybe some of that more scalable, budget-friendly stock setups within the XLRE as well. But I like XLRE very, very much. Yeah. Manuel says, can I take a look at ES this morning? Sure. Manuel, I'll tell you what, if you have some time, head on over to the free video that I posted on Thursday, not Friday, that I posted on Thursday. And I walked through, and it was a very, kind of, it was a title where I hope it got some attention, where this is why the S&P is heading lower. And I don't know that we're going to head into a downtrend from here. We're not there yet. But having broken a few key levels, having only one cylinder by way of the XLV really holding this thing up, there's fewer legs on this table called the S&P for it to balance on. So I'm looking at ES heading lower. I mean, I think if you check that video out, I think you'll really like the breakdown, because what I went through is not only the implications for the ES based on certain technical breakdowns, but also the implications for other sectors, other corners of the market where there are opportunity for us. So thanks for the question. All right, next up is, let's see, Magic Mojo. I have a bunch of these. Yeah, I have a whole bunch. So there's a guy on Etsy. It's actually a couple, and they make things out of different kinds of wood, and they're really light. Yeah, I got a ton of these. I got something for the different days. Magic Mojo. Yeah, I like to think so. It is from now on, Steve. The Magic Mojo necklace of the day is actually a lion's head. My maiden name means lion. My name, Raghee, and then my maiden name means Raghee means Queen of Queens, and my maiden name means lion. So yeah, that's it. So I got my lion today. All right, Kelvin. Good morning. What do I think of FXC for a long? I love where you're looking at the country currency. So Calvin, let me give you some insight into the notes and some of the country currencies I shared in the weekly notes as I looked at this week in the market. And the idea was absolutely there are countries that we are very interested in, EWZ, EWA, of those doll commodity exporting countries. FXC would be the currency of. FXA, EWA, FXC, EWC, they're all in play. And I like to look at the currency and the country when I'm looking at those plays. The challenge here is FXC is not in a trend. It was in an uptrend, but it's not right now. So I would say if you're going to look at any of the FXs, these are those currency share ETFs that are an alternative to, say, futures, contracts, and currencies, or even, of course, the biggest market of all, the foreign exchange, Forex, FXE, FXA, FXB, which is sadly and ridiculously illiquid. FXE is quite liquid. This is an open position we have. We're looking at lower lows in this one. This is actually, well, you know what I'll tell you, Kelvin? This is a neat way to engage the Canadian dollar, but I'm not really focusing on it. This is the UUP. So FXYEB, that's where I want to place my attention, where there's a clear contrast between the strength in the dollar and the weakness elsewhere. And FXC is a tricky one. If you're going to go with a doll, love that you're looking at currencies. Check out FXA. Make sure the liquidity is there, but check out FXA. All right. Peter asks, how do you buy the Darvis 2.0? So Peter, my first thing is going to be, please make sure you grab the free Darvis 2.0, right? We have the Darvis 2.0 available for free. So please make sure you go grab that. And I'm assuming you did, and you thought this is great. And now I want the signals, the Darvis signals, Darvis 3.0. Same thing, Darvis 3.0 signals. So two ways you can do it. You can go into the Simpler Trading Indicator store and grab my indicator bundle. You can, I think, is Darvis 3.0 a standalone? I don't think it is. So it's part of the indicator bundle. But I'll also tell you this, Peter, unless you're in a big rush, from time to time, these things go on sale. And I always like to let you know when we're having a sale. So I want you to be able to save as much money as you can with your education and your tools, so you can put more money in your trading account. So sales, and then oftentimes, one of the things that Trish makes sure that we do when we have a class is to include a lot of the indicators that we'll need for the class in the class tuition. So as far as I know, it's only part of the bundle, but I think I have a class coming up in June. I'll have to check with Trish what she's gonna throw in there, but um, wait for a sale is usually my advice, but you can find it in the bundle back at the Simpler Trading Indicator store. Okay. So, as always, thanks for the question. All right. Moving on to shorting Meta. Oh, Zucks. Oh, Zucks. So, you know, what I would say when it comes to shorting Facebook at this point, it's really not going anywhere. I don't know, Keith, that we're not going to get more investors and traders fascinated with what's going on with Facebook, thinking they can scoop this thing up in the $200 range. Um, it's a tough play right now because I don't see a really great clean setup. I was looking at this 1, 2, 3 for a brief period of time. Maybe we would, break out, but it was taking just too darn long to actually trigger. So, that's off the table. Then if a 1, 2, 3 pattern does not break in the allotted time, 'cause I've traded hundreds and hundreds of these 1, 2, 3s, and I've noticed that they have the best ones, the ones that break out have certain criteria. One of the criteria is, and this should be something that a lot of traders look at anytime they look at patterns. What is the ideal amount of time that the pattern takes to form and trigger where we get good follow through? Because I see a lot of conversations about patterns, but not a sort of time based cutoff for when we don't want it anymore. If you want to learn more about the 1, 2, 3 pattern, by the way, the reversal and the continuation, Trish has written up 2, if not 3, great explainers over at countdowntrader.com. So if you want to learn more about this pattern that maybe you've never heard of, I don't use a lot of charting patterns. I use sort of behavior patterns, right? I don't want to just limit it to, we have a cup and whatever pattern, cup and saucer or pennant. We want to look at the behavior that's guiding, ruling that pattern. So it's always about the behavior. So, anyways, check that out. But I would say right now, Keith, I love that you're looking at it, as am I. It's gone neutral, but I don't know that I see a really clean setup anywhere as of yet for this. If we retest some of these volume ledges, maybe. But I think the other question is, Keith, if I'm going to play Facebook, my time horizon, not the time frame, not the interval, but my time horizon is going to be quite large. All right. Quite large. All right. Mr. Murph, I saw your question there. I didn't want you to think I was skipping it. I don't look at the UVXY at all. I think it's misused, overused. It's just not something that I personally use. So this is where it's really important for someone on this side of the mic and the camera to say, not a tool that I use, and I'm not going to speculate, but I don't find it to be that useful usually. That's just me. I do look at VIX futures from time to time, just as a volatility gauge. We're on the lower end of that volatility gauge, but I just don't use it. So I just, want to put it out there. I'm sure someone else here in the simpler verse has some insight into it, but I think for me, there are other better tools for that kind of gauging. All right. So next up, Pfizer. And thank you for the question, though, Mr. Murph. I just didn't want to skip over it, but I also want to say, if I don't use something, I'm just not going to comment on it because, well, the analysis isn't going to be as helpful, right? Pfizer. Do I like Pfizer? I think there are other better names, kind of going back to our early conversation about, sure, relative performance is part of the conversation, but relative to what? Right? This is where a lot of traders get it wrong. I'm not going to curate my own list. I'm going to use the lists that are curated, pre-curated by the markets, ETFs, the sectors, the niches. And then I'm going to look for the outperformers. And I think within XLV, which I want to buy at the tide level, Andrew, if at all possible. I like the XLV, but is Pfizer within it something that I would prioritize? Probably not. However, if the overall tide's heading higher, no question that Pfizer might go along for the ride. So thanks for the question. JR asks about, is Nike a short? It sure does look like one I want to keep an eye on. I would say that because of the overall move lower, dominated by red grab candles. Look, Nike was very good to us not all that long ago. You can see this little circle back there. I don't know if you can see that or not. But that was a short we put on in the Sector Secrets Mastery. Would I like to do it again? Yes. But from where? Notice how jumpy, choppy, gappy Nike is. It's sort of breakdancing, right? And I don't want that kind of movement, but it would be something I'm looking at for a short. Yes. Steve, gold. Sure. All right. Taking a quick look at gold. Gold's heading higher. There's two markets. I'm going to tell you straight up. These are two markets that we've been looking at in the futures room, two markets that we've been looking at in the Sector Secrets Mastery, and two symbols that I don't have exposure to. I have exposure to metals and mining. I have exposure to oil and energy, but both of them triggered beautiful fades off the Darvis with Darvis signals and a stochastic confirmation. And I am in neither. Do people miss trades? You're looking at it right here. Trades do get missed. Our book is rather full. Those of you in the Sector Secrets Mastery know our book of trades is rather full. But this is a good old fashioned fade. We knew we don't want to short it. North of the 200, previous trend was up, dominated by green grab candles. But up at these heights, I have no interest in engaging gold. So I love the long position, but it needs to come back down to a level of support, preferably oversold support. And then we'll just look to play it all over again. And I remind myself of this because I get traders saying, hey, Rog, I know we've been on a tear. Oh my gosh, I look at all the winners. We've been taken off the table, but I missed some of these. I miss them too, right? And this is what I remind myself. Can y'all see that? Maybe a little too big. There we go. Don't chase. We are not Jack Russells. Those are super cute dogs, but we are not Jack Russells. There is another bus coming. Gang, there will be another setup. There will be different opportunities. And if I'm still having, I'll give you straight up, I am still kicking myself over missing last Monday the buy in crude oil. I'm missing it. I'm upset because I didn't take it. I'm upset because I didn't send it out. I know we talked about it, so some of our members grabbed it, but I'm not in it. And every time I see it move higher, believe me, it's still irksome. But I have to remind myself, Rog, there's another bus coming, right? It may not be that bus, but don't chase. So I struggle with that too, gang. I absolutely struggle with that too. As always, gang, I'm out of time and I'm actually over. As always, thank you so much for joining us for Charts and Coffee each and every morning. Look, this show is all about you. Otherwise, I'd just be talking to myself and my puppy dog back there and my cat, who really neither of them could care less about the market. And so thank you for your dedication. Thank you for your time. I hope the show is helping, give you an idea of how we're navigating the markets. I'm not general analysis, but specific to things that I'm doing specifically, hopefully giving you ideas that are tactical and timely. So if it's helping, again, thank you. Smash that like button. And if it's not, leave a comment, leave a question in the comment section below. We all check them. I check them. Trish checks them. It's a lot of times the content for free videos that we have. So we're always looking at how to, better serve you all, better help you all navigate these markets. So thanks again. I'll see you tomorrow. Same time, same station.